Yo, it's your boy Coinstock here, back at it again, stuffing these duffel bags and collecting that cheddar. Before I begin, please don't hesitate to like, comment, and subscribe. Also, disclaimer, I'm not a financial advisor, I'm just a friend trying to educate you. Alright, today, as you could probably tell by the title, that we're going to be talking about this purported DeFi 3.0, alright? Now, you're probably thinking, what the heck is DeFi 3.0? We're even in the DeFi 2.0 category? All right, so DeFi 1.0 was like lending platforms, yield farming, those types of things. And I hope you would know about that, but there's tons of videos to look that up. And then there's DeFi 2.0, where it solves the DeFi 1.0 liquidity problem. And these platforms, they sell you their tokens on a discount to which you could stake, and they buy up your liquidity, and they use the liquidity fees to give it out to the stakers. Now, of course, there's other protocols too, like Abracadabra and Alchemix, which they're basically leveraging, where you can send in your USDC, USDT, and then over time they will put in a staking and yield farming platforms, and it will eventually pay out its debt on its own, and you don't have to really pay it back given a certain amount of time. Now, this is a DeFi 3.0, and I'm going to talk about it with you. So this is cross-chain capital.finance. Now, there is multi-chain capital, but it's on Ethereum. This is built on Avalanche, and looking at Ethereum just feels expensive. So we're just going to cover cross-chain capital for now. You can already buy it. It got released, I think, on the 23rd of November. So you buy CCC on Avalanche. We farm on multiple chains and return the profits to holders. Alright, sounds pretty sweet. Now, this may be high risk, but the rewards, my guy, the rewards. Alright, so you can view the chart here, which we'll look at in a minute. And then their dashboard is coming, so it's not even up yet. And then bridge to Avalanche, which I haven't even tried. So let's go ahead and read more into this project through their Medium. And actually, we might pull up their Twitter later as well. So what is cross-chain capital? Many are wondering what is cross-chain capital and why it is a good long-term investment. In short, CCC is a pooled investment fund that trades in liquid assets and is able to make extensive use of more complex portfolio construction and risk management to improve performance. Holders are rewarded in two ways. One, from passive reflections derived from a transaction fee of 10% for CCC buys, and two, from CCC investment strategies that generate long-term sustainable buybacks and liquidity for token value. So there's a 10% tax on buys, and you receive them in reflections, and we've seen that in reflection tokens. But what about the sell? There's definitely a 10% tax for the sell, but it goes to the Treasury, and the Treasury is with the step two, from CCC investment strategies that generate long-term sustainable buybacks and liquidity for token value. So they could put it in yield farming platforms, or they could put it in DeFi 2.0. That's why they're quote unquote DeFi 3.0. All right, so it says, let's start with the preliminary definitions and go step by step. What are passive reflections? And here's the model right here. So you put in AVAX, and you get back 90% of your CCC tokens, and then that's for buying. And if you sell, you put in your CCC tokens, and you get 90% for AVAX, and the 10% on the buy goes down, and it's distributed amongst everybody. And if you sell, it goes down into the Treasury, the 10%, and whatever yield farming platform they want to do. All right. So passive reflection simply means that from every buy, there is a 10% tax that is automatically, from the smart contract, distributed to holders. If there is $100,000 of buy volume, $10,000 of that is equally distributed to holders. If there is $1 million of buy volume, then $100,000 is distributed to holders. So that's fair enough. That's 10% through and through. It says, how do you know you have received the reflections? And then very simply, when you go to Trader Joe, and I've already got this, let's say like last night, I'd say about 11, so about 12 hours ago as of recording, and I got 300,000 of these tokens. And I mean, it's only like a small market cap. It's only $14 million. So it's definitely picking up speed with where reflections are concerned. Hold on. Let's see. What is the purpose of the Treasury and what is farming? So 5 million staked. Here's the model right here, but I just want to go down and reading it. The Treasury is the total funds accumulated from the 10% sell tax and all the investment activities of cross-chain capital. It's the sum of sales plus investment returns. Currently, there is over $1,200,000 in the Treasury, generating over $100,000 per week for buybacks and liquidity, or roughly $15,000 per day for buybacks / liquidity. So they put all this money into like a yield farming or DeFi 2.0 platform or a lending platform, and they generate all these funds. And once they get all these funds generated from this money that's already in there, they buy back the token, and it makes, price appreciation. That's a thing. So farming is a broad crypto term that generally means staking / lending crypto assets for high returns. Our Treasury is used to farm in other protocols for high returns, which are then used for buyback / liquidity next week, next month, next year, while simultaneously growing from compounding and transaction taxes. Even if everyone stopped buying / selling today, the Treasury would still grow on its own and be used for buyback / liquidity, still generating passive income for holders and increasing the price floor of the token, which that's just beautiful to hear. Like, this sounds really, really good on paper, but who knows, it's crypto, all right? How's the Treasury growing steadily? Let's say we have $1 million in the Treasury untouched. That capital has been accumulated from 10% of sales, meaning 10 million of trading volume. On the other side, $1 million has been distributed to holders in the form of passive reflections derived from 10% of each buy. So it's kind of like buys, it's for us. Sells, it's for them, and they put it in, we're already talking about it, And as a holder, you have already earned passive income from the 10% buy tax, which you can see in your increased balance. On the protocol side of things, we could take that $1 million from the 10% sell tax, stake it into a farming protocol or decentralized reserve currency such as time, and receive a passive yield from those assets. That passive yield can be sold daily or weekly for buyback / liquidity. So here's the thing. We can read on about all that, or I'll just put this in the link in the description. That's kind of all I had to read for now. But here's the thing. This is not set in stone. They, the DeFi 2.0 protocols or the yield farming protocols are not set in stone. Hold on. I think I actually saw something up here. Yeah. Visual demonstration of Treasury management. This is not the current holdings or strategy employed by the current Treasury. So it's not set in stone yet. But I think they want to develop into a DAO, or they want at least like a vote on what we do with the funds, but I don't know. But let's go ahead to the chart. And the chart, so it started on the 23rd, and then it started pumping up. And it went all the way up to like 0.00001715. Then it went down, and then it went back up. So there's definitely room for growth. Hold on. And the market cap is 13 million. All right. So it's still definitely in its infancy. And let's look at Snow Trace. There's currently 1 trillion tokens, 100,000 million, billion, trillion, and there's 5,536 addresses holding this token, and it just came out, 4 days ago? So this definitely has room to grow. And that's pretty much all I got to say. I just, wanted to keep you up to date on the down low. What do I think about this project? Honestly, if this is DeFi 3.0, then it is. If it's not, it's not. But yeah, I threw a little bit of, change into it, because it's still got room to grow. And I'm definitely going to keep my eyes on it. But what do I know anyway? I'm not a financial advisor. I guess I'll see you guys later.